So anytime I'm starting with a look at my Forex Market Pulse, I'm usually going to begin with the US dollar index. And the reason for that is it's the most important of my Forex Market Pulse charts by far. So US dollar index. Now, remember, when I'm talking about the Forex Market Pulse, I'm talking about commodity futures contracts. US dollar index. I'll look at the Dow. Again, psychologically speaking, I think the Dow oftentimes will shed light on risk appetite and risk aversion as it is reflected in equities better than anything else. I'll look at the continuous commodity index, the CCI. Don't confuse the CCI commodity channel. Did I even screw it up just now? Continuous commodity index is what this is. That's the futures contract. Continuous commodity index. The CCI indicator, okay, the CCI futures contract, not one and the same. Commodity channel index is that tool that we will sometimes use, that I sometimes use when I am looking at trend reversals. So down here is a CCI, commodity channel index. Up here is the CCI index, which is the continuous commodity index. All right. So even I trip up when I'm talking about that stuff every now and then, but I want you to know the difference. This is the S&P 500 of commodities. All the different sectors. I want to know what commodities, generally speaking, are doing as a whole. Moving higher, moving lower. We can drill down and look at individual commodities within that bigger picture, like looking at crude. Crude is another part of my Forex Market Pulse. Crude right now, since we're on this, is stuck in a range, as you can see. Certainly it's on the bullish side of the range, but it's topping out, as you can see, as prices are running into resistance along what is now a double top. Now, one of the things that we have to remember is crude is being driven by a lot of fundamental concerns. Well, I should say was. The push higher was being driven by a number of fundamental concerns that focused around Iran, and we had this very sharp push to this previous high. Now, since it was headline driven, concern driven, fear driven, unless that fear continues, or even more so is heightened, that's even really the key, we're not going to break through that 103.50-ish area that seems to be where the double top is situated. In fact, I'll give you specifically where that double top is. We're talking about highs along 103.37 and 103.73. The market has not been able to find any buying support above either one of these highs, really above 103 period. Okay, we seem to have plenty of buying support above the $100 a barrel mark, but not really much above that. Okay, so why am I spending time on crude oil? Of course, if you are a dollar Canada, Aussie, Kiwi trader, it's important. I think what's very important right now is a lot of people are looking at crude and seeing this as some sort of reflection of, well, they're having an interpretation of this move higher in crude as a positive in terms of risk appetite, in terms of expectation of growth, in terms of recovery and all these other things, when in fact I think this is a fairly directionless market right now, crude, even though it does have obviously the bullishness of being over $100 a barrel. Currently, I think the market trend is a little bit more directionless. I think a lot of the push higher recently was obviously fundamentally driven. And again, crude is but one market. I think there's a lot of speculation and concern about crude itself, but in terms of that expansion, in terms of risk appetite, when I really feel that the market is in a risk appetite mode, I think commodities in general are going to move up higher, not just crude. So be careful of looking at crude and saying, oh yeah, commodities are higher. Here's the S&P 500 of commodities, the CCI, and it's been continually moving lower, while crude has been moving higher for its own reasons. I don't know that risk appetite is necessarily the main one amongst them. Another way to drill down on that is to look at the Dow. So we're kind of like in a funnel situation where we've got a lot of information, and as we continue to hone in on why the dollar might be up, or why the Dow might be up, or why crude might be up, why commodities may be down, etc. Certainly, the Dow looks a lot like crude. It's not a strong uptrend, but it certainly is bullish. Green grab candles, a lumpy, bumpy, but still slightly 12 to 2 angled uptrend. So I don't want to ignore the fact that, yeah, we do have a certain amount of strength in equities, but I don't want to ignore also the fact that in terms of the relationships that I would normally look for, and I don't want to use the word normally because there is no normal relationship. Don't ever think correlations are fixed. You don't want to depend upon correlations alone, but there are typically relationships or a push-pull that seems to occur, I find, when the market has a lot of clarity. When I say market clarity, that means I could jump over to any one of my daily charts of my Forex pairs and find most of them are in some sort of trend. Right now, that's not the case. We have very few Forex pairs that are in some sort of trend. I actually had a video about that I posted over at Chartly not too long ago, and talked about that specifically, a lack of directional bias. In fact, I'll push that link through right now. It's under my Chartly username that we looked at earlier. But when I don't have directional bias, I'm very cautious. I'm usually going to retreat to shorter intraday time frames because we lack the organization of sentiment and momentum, and therefore we don't have a trend. I think trading non-trending daily chart markets, in other words, even if I'm going to trade a 15-minute time frame or a 240-minute time frame of a particular pair, I find that the psychology is easier to identify, support and resistance reactions are easier to gauge when there is a dominant psychology. And we only have a dominant psychology with better follow-through, I find, in a trending market. So here's my problem with what's going on my Forex Market Pulse charts right now, is the fact that I've got crude in an uptrend, I've got the dollar in an uptrend, and I've got the Dow in an uptrend. Now, this could probably be explained 1,000 different ways if I was talking to somebody who's a fundamental trader. But I'm a chartist, and I'm a chartist who's known that, for the most part, risk appetite is reflected in stronger commodities, which we don't have, a stronger equities market, which we seem to be clinging on to, and a weak dollar. Now, the dollar right now is being propelled higher, I think, for a number of reasons, not the least of which is Europe. But if there is true risk appetite, and this is the way it's been in the past, so I always have to keep in mind that this may not be the way it's going to be in the future, but I got to keep in mind the fact that usually the Dow and the dollar have an inverse correlation, and we don't have that right now. Now, this is really important to understand, because even though we haven't even looked at Forex pair number 1, understanding how the dollar is behaving and the markets that will affect and be affected by the dollar is going to influence not only the pairs that I'll consider trading, but the time frames that I'll consider trading. And a quick look at that lack of unison, that lack of correlation, these Forex Market Pulse charts simply are not behaving in a way that I think make a lot of sense right now. The Dow and the dollar moving up together is an unusual thing in terms of my being able to put my finger on risk appetite versus risk aversion. I've got a crude oil market that is staying pretty strong, at least on the strong side of the wave, with a wave that is trying to get to a 12 to 2 o'clock angle. Okay, yet I have got commodities in general, and by the way, this does reflect crude as well. I've got commodities in general which are more or less weak to slightly choppy. So what's the true picture? Risk appetite, risk aversion. Are commodities strong or aren't they? Depending on your point of view, you could probably make an argument for a lot of different opinions. Well, a lot of different opinions mean what? A lack of organized sentiment, a lack of organized momentum, and that just to look at these charts are going to make me consider moving to shorter term time frames, staying nimble because there is not a clear consensus. So when I jump over to my Forex charts, and we can start with any pair that you'd like, but I'm going to go over to Euro US dollar, take a look at the daily. This chart's been moving down lower, and it has for a while. This is one of the charts we talked about last time we sat together for one of these videos, and I talked about the directional bias remaining bearish, the grab candles remaining red, and how this was one of the few charts that was actually hanging on to a trend. Another one was the euro yen. And when I have the bearishness that I can identify with my 34 EMA wave, with my grab candles, it's much more clear to me that on rallies, I want to position myself up against resistance. Now let's contrast this with another pair. Let's jump on over to, say, the Aussie. What is the dominant psychology here? We do have, or we did, have a lot of bullish momentum. Okay, but it exhausted. By the way, what you don't see here, where it exhausted, and I'm going to insert that right now, was at the 200 period simple moving average. I think this is a chart that everybody should, this is a indicator that everybody should keep on their chart. 200 period simple. There it is, in black. By the way, the indicator in gray here, you can see here, in that thick gray line, or silver, whatever you want to call that, that is a 20 period simple. So when I look at the lack of direction, the exhaustion that we can see here at the 200 period simple, what we have is a market that does not have an overall dominant psychology. Stuck in a range, a lot of volatility. This is going to make me retreat to what? It's going to make me retreat to shorter term time frames. If you're trading a COMDOL like the Aussie or like the Canada, it is really tricky right now. Because, for example, with the Canada, we can bring into focus two Forex Market Pulse charts and go, well, which one is it cooperating with? The challenge with COMDOLs are they have a split personality. On one hand, I have obviously the relationship between the greenback and the loonie. This is, after all, the US dollar, Canadian dollar pair. So looking at whether the greenback is strong against the loonie or not, we have to look at the dollar. Is the dollar in general strong? But what's going to help the loonie gain strength? A strong crude oil market, right? Their number one export. So stronger, higher prices in crude would typically help the loonie gain over the dollar. But we have an uptrend in the dollar, and we have an uptrend in the loonie, or I mean in crude oil. So what's that doing to the dollar Canada in terms of its loonie personality, right? In terms of its U.S. dollar Canadian dollar pair, what is the Canadian dollar itself telling me? Well, it's kind of hard. I mean, right now you can see the dollar is more or less been having its way with the loonie. You can see this moving up higher, been winning that battle. Today we see a little bit of weakness, okay? But the challenge is when I don't have my Forex Market Pulse clicking the way it normally should. And I hate to use the word normal. I should take that out of that. But for me, that's what clicks in my head. Strong dollar would typically mean weak equities. Strong dollar would typically mean weak commodities, including crude. So usually what I have with the dollar Canada is, if I have a strong dollar, I have a weak crude oil market. If I have a weak crude oil market, I usually have a weaker loonie, right? Weaker Canadian dollar. So in those situations, the greenback is able to gain on the loonie and push this chart higher. We're directionalists right now because I think, generally speaking, market participants are fairly confused. And who could blame them? We have a situation where the push-pull, the normal push-pull of the dollar and the Canadian dollar, the US dollar and the Canadian dollar, is in a situation right now, and I'm drawing in another triangle here. It's in a situation where we have to figure out what's driving the market. We don't really have a main driver, and hence we don't have any kind of clear trend. In fact, we seem to be squeezing ever narrower into a triangle pattern. Everyone see that? So, and this is a pretty balanced symmetrical triangle, actually. It's not too bad. So we're squeezing ever narrower into this pattern. I could even draw another downtrend line there inside this triangle. I probably should not neglect this uptrend line either, but it more or less syncs up with this one here. So, understanding where my support and resistance is waiting, very important. Drawing it on my chart and then taking a snapshot of it, even more important. So, what we want to keep in mind as we kind of draw the line between the Forex Market Pulse and then coming into how I interpret that odd behavior of strong dollar, strong crude, strong Dow, where does the loonie come out with that battle? How is the dollar faring against, how is the US dollar faring against the Canadian dollar? Do traders have a dominant opinion of what they're seeing in crude oil, in equities, in the US dollar, and is it not being reflected here in the Canada? I would say no. I would say no to the last question. No, that strong crude, strong dollar, strong equities market is not translating into any kind of clarity here. What does that mean? I'm going to retreat to shorter term time frames. That's what that means. And that meant last week, looking at shorts, looking at, as we were moving up higher, looking at different ways to take advantage of the movement higher here. But that could mean, with the little bit of exhaustion we're seeing now, are the shorts coming in? It looks like we're rolling over. Are the shorts coming in? 50-minute, short-term intraday time frames. Are those shorts coming in? As we seem to be perhaps exhausting. Okay, so that is a look at the Forex Market Pulse and some of the questions I hope that you can answer by looking at those and understanding how important it is to recognize whether there is a directional bias, a dominant psychology being reflected on that daily time frame, and kind of making your decisions as far as not only which pairs to trade, but which time frames to focus on by making that kind of analysis of the larger market. Again, that Forex Market Pulse.